A rally in the banking, investment and insurance counters has been the key driver in the boom at the Nairobi Securities Exchange, which has seen the 20-share index jump past the 5,000 mark for the first time since January. Now, this has allowed investors to reap from the big increases in share price. But a slowdown in the commercial and services segment and the emergency of segment that is dragging the bus. Here's KTN's Adelaide Changole with the rest of that report.
After an 8-month wait, the Nairobi Securities Exchange finally broke the 5,000 psychological mark as the ongoing rally lifted the 20-share index.
The all-share index is up about 13%, whereas the NSE 20 is around about 2.6%.
Amongst the biggest drivers of the rally were the banking and insurance counters, which registered an average gain of 20% over the period. Equity Bank saw its share price jump 49.2% from 31 shillings in January to 46 shillings and 45 cents, while CFC Stanbic share price gained 48.8% to trade at 128 shillings, up from 86 in January. Housing Finance was trading at 44 shillings and 75 cents, 46.7% higher than January's price, while KCB was up 34.1% over the period. At the same time, insurance firms Pan Africa, Britam and CAC Insurance gained 42%, 34% and 30% respectively as their diversification efforts increased their attractiveness to investors.
The return on equity in the banking sector is pretty good in Kenya, and I think that's really what's driving investors in there.
But the rally has not diffused to all counters, with some having shed critical numbers over the 8 months. Amongst these are Kenya Airways, whose share price lost 14%, and TPS East Africa, which manages the Serena chain of hotels, which has shed 20% of its share owing to the recent spate of terrorism attacks that have crippled the tourism sector. The energy counters also saw their share price plummet over the period. Kenol Kobilan total share price fell over the 8 months as a combination of falling market share and rising competition dimmed their attractiveness. Meanwhile, the demand for capital for the 5,000 megawatts energy projects being undertaken by the country had weighed on Kenya Power and KenGen in the short term, with share price for both counters falling 5.7% and 18.7% respectively. Safaricom, the most liquid counter and perennial top mover on the NSE, registered a modest 17.7% growth in share price during the year, rising from 11 shillings to 12 shillings and 95 cents. But despite this, experts say the counter is still well positioned for anyone looking to invest in the stock market.
Safaricom is positioning itself still strategically with the new products, entrenching M-Pesa into the livelihoods of everyone in the country, and now through, as I said, getting into businesses through the Lipa na M-Pesa offering.
Adelaide Changole, KTN Business.